from Germany. And Tim, and there's something that parses right over to PwC, and that there's been a massive debt buildup, but it's really not on the back of technology, which has a massive cash buildup. And the implication here is that debt is more focused in traditional American industries. Is PwC seeing that?
Yeah, I would say that is very similar to what we're seeing at this point. It is more traditional. We have seen an increase in technology, but not at the same level as you would see some of the traditional areas, Tom.
Let me bring up a sensitive question, and you know, you're such a straight shooter that I'm sure I'm going to get an honest answer. What is the differential between how any given major accounting consultancy does business in New York or London or Beijing or Shanghai or around the world, Delhi, wherever? Is it a uniform audit process, or does it differ? Is it malleable nation to nation?
I would say that there's clearly differences nation to nation, but the principles of auditing across the globe are very similar. It's independence, objectivity, and making sure that investor protection comes first. And that is right. Largely consistent across the globe. Now, the standards that are followed different parts of the world, but as I spent half my time outside the U.S., the concept of investor protection is something that I do see cut across geographies.
I mean, you see this all the time. Of course, we hear it here at Bloomberg Surveillance, Tim, the idea that, well, the accounting in other places is the same, but you have to live it. A firm like you have to go in and do this nation to nation. How do you adapt your auditors to that?
So one of the things that we focus an awful lot on is culture and training, and we also at any given time have a couple of thousand people who are living in different parts of the world to make sure we have a sense of shared values in terms of how we do things. We have very robust kind of quality checks that take place across the globe to make sure the quality is consistent. And frankly, Tom, straight shooting, always looking to improve. Like, we're not perfect, and we're always trying to raise our game. So when we see an opportunity to improve in a different territory, we take those lessons learned and bring them across the globe, and that's a continuous loop that is always happening.
So, Tom, Tim, I know you put out your PwC, your global CEO survey. I don't see, kind of coronavirus in there or these big health issues. But how do you feel like corporate America is kind of prepared for some of these just really one-off things that come out of nowhere?
Yeah, so just thanks for referring to the survey. We launched it in January in Davos, and we ask every year for 23 years straight, what are the top risks? And health crises, pandemics, clearly it wasn't in the top 10 in terms of CEO concerns. And I think the coronavirus is a great example of how CEOs have to be ready for anything right now. I do think that in many respects, your best companies have been preparing for something like this for years. Meaning, did they see this coming? No.
Right.
But we have seen a good percentage of our clients, not all of them, but we have seen a good percentage of them for the last couple of years preparing for what I'll say, fixing the roof when the sun is shining. They've got their cost structures in play. Yeah. They're leveraging more technology. Now, to be frank, some haven't, and their ability to deal with something like this is going to be way less equipped than others.
Tim Ryan, thank you so much. With PwC US, their chairman, greatly appreciate a snapshot in there to what corporations in the audit process. While we're speaking with Mr. Ryan, Paul Sweeney, it's real simple. 2-year yield breaks down, and critically, that steepness of the yield curve in the vanilla 2s, 10s is the difference in yield between the 10-year and that plummeting 2-year goes out to new steepness, 37 basis points. This is, Paul, a pivot off the 30-year, even a pivot off the 10-year of a lower yield in the short-term space.
Yeah, absolutely, Tom. The 2 years you called out at 0.5618. That is the low of the session here, Tom. So really a concern there on the short end, and you got to bring in that zero interest rate, that lower bound. It's got to be part of the
To seize change, to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, President of SEI's Investment Manager Services. At SEI, we understand the emerging driving forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/C's change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Money Minute. Just ahead of the opening bell, futures are sinking as investors assess government efforts to contain the coronavirus outbreak and its impact on the economy. Fewer Americans are seeking unemployment benefits, with first-time filings down by 3,000 last week to a total of 216,000. That matched estimates. The latest numbers underscore a healthy job market, even amid growing concerns about the impact of the coronavirus. Southwest Airlines is the latest carrier to feel the sting of the coronavirus impact on air travel. The carrier is warning of a significant drop-off in demand that will dent first-quarter revenue. United Airlines and JetBlue are reducing their domestic flight schedules as they deal with the drop in demand. One airline trade group says that airlines globally could lose $113 billion in revenue because of the outbreak. Dow futures down more than 600 points. NYMEX crude slightly higher, $46.88 a barrel. Gina Cervetti, Bloomberg Radio.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers. You can't be the only one who spends time examining angles.
This deal, what would it look like?
You're right. The others are here.
Is he doing a good job, you think?
Bloomberg Markets, weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the opening bell brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. Right now, the S&P 500 is lower at the open. It's down 2.5%, down 77 points at 3052. Dow Jones Industrial Average down 2.5%, or 674 points at 26,423. And the Nasdaq's down 2.3%, or 211 points to 8806. 10-year Treasury up 1 3/32. The yield 0.93%, and the yield on the 2-year 0.56%. NYMEX crude oil is up 0.25% or 12 cents at $46.90 a barrel. COMEX gold is up 1%. Or $15.90 at $16.59 an ounce. The euro 1.1197 against the dollar. The yen is at 106.84. Tom and Paul.
Karen, thank you so much. Here we are, negative 680, as Karen mentioned. The VIX up 5.46 points. It's a good day to watch the VIX. You move from that 30 level out to 36.89, and I guess we're calm as we look at the 2-year yield, not calm. Moments ago down to 0.5599. All you need to know if you don't keep score in the 2-year yield, that's extraordinary. We have extraordinary good perspective now from Alicia Levine. She's the BNY Mellon, and she is a strategist with a prodigious academic background, which means she has studied her history of economics,
the education,
finance, investment. Well, she's a worker bee on it all. You and I were out, partying, drinking cases of Genesee cream ale, and Alicia had her Kufel and Esser slide rule out and was doing work. Alicia, give us a historical sense here. We talked to Arthur Levitt about this, and your cross-platform academics, I think, makes you qualified to say, well, this is like that. What's the that?
So this is like the oil shock of the 70s in that the market is trying to price in a disruption to supply. So we have a supply side shock here, which is predominantly emanating from China. Okay, so that's the first thing the market's trying to price in. We have a very different Fed, and the cut that happened 2 days ago is an attempt not to do what the Fed did in the 70s, which was to hike rates in the face of this because of the fear of inflation. So supply shocks do tend to give you upward pressure on prices, but we also have the cutting down of demand as well, which is as this virus rolls its way through developed economies, and people starting to stay home from schools and from work, you have a destruction of demand as well. So that this is sort of like it's an exogenous shock, and to put capital work today, you have to decide what you think. So the facts are amorphous, right? It's in a sense it's hard to model, but if you model more or less a V-shaped recovery by the end of the year, more or less you're within the 2,800, 3,000 you can invest.
And down 730 points here right now, the VIX 36.81. Alicia, Darren Acemoglu writing up on our politics and project syndicate a week ago, and Ken Rogoff with a 1970s supply shock essay in Project Syndicate a few days ago. And at the absolute bottom of it, he talks about the moment and the solution. And Paul, this has come up like 3 times. Why don't we just do away with the tariffs? Even if it's interim, just come out and, Mr. Kudlow's talking up in Washington, there's no real problem here. Well, okay, maybe there is, maybe there isn't. Just like say unilaterally, we're going to pull back the tariffs. So is that like the dumb? Ken mentions this at the end of his essay.
So I can't answer the politics of this. I can only talk about the economics of it, which is it is an incredibly easy fiscal policy for the administration to implement literally overnight because the administration does not have to deal with Congress on rolling back the tariffs. I would suspect that this is what we're going to see May, April, hard to put time frames on this kind of thing, but we have not hit peak economic impact yet in the U.S. I suspect we will have to see that first, so give it 6 to 8 weeks from now, and it's a very easy fiscal stimulus that the administration can do overnight. So I agree. This is the thing to do first.
Alicia, what do you make of the Fed's move from a couple of days ago? Was that panic? Was that wise? What was your initial take?
So I did not think that was panic, and it's very interesting because my personal opinion was that they were going to cut before the meeting, and because the market was already at 100% probability of 50 basis points, and on top of that, there was really starting to be panic in asset markets about where this thing was going. In the end, our Federal Reserve is the only central bank that can lead globally. No other central bank has firepower left. So the U.S. does. Jay Powell had to lead on this for some sort of concerted global central bank response, and I think this was the right move to take.
So as an economist, you kind of hinted at it earlier in earlier answer. 6 to 8 weeks before you think we might feel the brunt of this virus in the supply and demand in the economy?
So I'm gonna use China as the way I'm going to school. Okay. China shut down its economy, right? 300 million migrant workers stuck at home, factories shut down, an entire province quarantined of 60 million people. There was no demand, and there was no manufacturing at all. So it looks like the shock to China more or less took 6 weeks, right? So we probably peaked out last week, and now we're starting to slowly ramp up the economy and ramp up movement and ramp up everything else. So that was only achievable because they shut the entire country down. Essentially, China was quarantined as a country, okay?
Yep.
If you cannot do that in any other nation, you're going to have rolling impact. So you're not going to see those high peaks of a destruction of economic output the way you did in China, and then coming off of that. You're just going to have this trickle because you cannot stop economic activity in the U.S. You're not going to quarantine the state of Washington.
Let's go over to investment strategy. I was making a joke about it. You know, you're in cash. And then what is your optionality in cash right now? Do you do dollar cost average into equities? Do you put in stop gains or stop losses or, you know, whatever you want to call it? What's the BNY Mellon strategy of people that want to be brave, they want to participate, and yet they're looking at the tick-by-tick carnage that's out there?
Yeah, so look, to put fresh capital in, you've got to close your eyes to the tape. You've got to model out earnings for this year, next year, your base case scenario, where you think the risk is.
And the strategic business plan of the companies you're acquiring.
That's right. So, look, if you assume that there's no earnings growth in 2020, which I don't think is an unfair assumption given where this is going, you're at 165 for 2020 S&P earnings. You put a 17 multiple on that, you get 2,800 in the S&P. I'll just say that the bond market and the VIX are much more concerned than the equity market, even at these levels and even with the sell-off today. And so my concern is that you have a huge disconnect in the price discovery of where we are going with this.
I love that concept, Tom, of price discovery. It just feels that way when you see these moves every day. It doesn't seem to be much of a conviction. It's just reacting to the headlines. Do you think the Fed will cut on March 17, 18?
I think there's a high likelihood we have another 1 or 2 cuts in the works here. Hard to know if it's March 18th, but definitely by July.
The price discovery I know is on the bag floor at Bergdorf Goodman. You walk in the door, you turn left there, and you have price discovery.
Exactly.
That's what price discovery. Alicia Levine, what are you writing about? You're there with a lot of smart people at BNY Mellon. You're looking at an institutional view, but frankly also a retail view. Give us the writing that you're thinking about as you go into this week with the volatility we see.
So what we're telling clients is that there's a distribution of outcomes, because in the end, it's trite to say that we're not epidemiologists, but we are not epidemiologists. And so therefore you have to do a scenario analysis around this. And what you find is if you take all the probabilities and the downside risks together, that actually your downside risks are greater than sort of your baseline scenario, which is that there is upside because there is a asymmetrical V-shaped recovery. And so it's fine to be invested. You should be hedging. You should be hedging. And the bond market is telling you we're staying lower for longer. It's telling you that.
Well, let me give you a scenario. Jeff Curry at Goldman Sachs is framing on demand destruction and inventory build in oil. Brent crude down $7, $8, $10 down to the low 40s, and even hedges to the 30s, given a pandemic build out. How does our world change with $43, $44 Brent crude? Down $6.
Let's think about what happened in 2016. First of all, what happens is you blow out the high yield index, right? Because 16% of the credits are high yield energy. So it's interesting because if you look at spreads now in the high yield market, it's only energy credits that really have those 1,000+ points of spread. The rest of the sector is fine. What I'd say to you is it's not even just oil. So you'd feel it there first, but then you wind up having destruction, in the Permian basin. And then what do you do then? These companies are all overcapitalized. They're over-levered. And
so you're suggesting the hydrocarbon 16% of the high yield index is not discrete and separate?
It wasn't in 2016. It is as of this moment. I suspect that's a sanguine view of things.
Okay, Alicia Levine, thank you so much with BNY Mellon this morning as well. I guess she improved the tape. We were negative 700 and we're now negative 680. So
talking up
Alicia Levine's talking it up. killing us with up on the tape. Let's look at the VIX seriously, folks. Again, the average on the VIX, 1920. Those good times of long ago, 12, 13 VIX. We go out through 20, through 25. You get above 30, and now out at 36.21, up 4 big VIX figures in the 2-day volatility of 17, even 1,800 points. With the news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. California recorded its first fatality from the coronavirus. That brings a total of 11 people dead and 159 others infected in the U.S. A cruise ship linked to the virus death is being held off the California coast. Federal health officials are expanding testing for the fast-moving outbreak. University of Alabama Infectious Diseases Director Dr. Gene Marazzo says work is being done to develop a vaccine for the coronavirus, but emphasized that this is a slow procedure.
This is not going to be a rapid process. We have to get this into healthy people and make sure it's safe and really take a close look at how they handle the vaccine. If that looks okay, then it goes on to a larger group of several hundred people, and you start to look at markers of whether or not it's protective.
Meanwhile, New York has reported 2 new cases of the coronavirus, bringing the total number in the state to 13, and a case has been reported in New Jersey. President Donald Trump reacted to the World Health Organization's data-driven assessment of the global death rate for the coronavirus, 3.4%. Trump told Fox News what he thinks the actual death rate is.
I think the 3.4% is really a false number. Now, this is just my hunch, but based on a lot of conversations with a lot of people that do this, because a lot of people will have this, and it's very mild. Personally, I would say the number is way under 1%.
A search for missing tornado victims continues in Tennessee, where 2 deadly twisters hit this week. The hardest hit was Putnam County, where an EF4 tornado with 175-mile-an-hour winds ripped apart an entire neighborhood. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg Poll.
Michael Barr, thank you so much. Well, we got the markets open for you, and it is not pretty. S&P off about 74 points here. That's about 2.4%. Dow off 680. Let's call it 680. 26,410 on the Dow right now. NASDAQ off 185. That 2-year yield, 0.5697. We'll take it out 4 decimal points, as Tom likes to do. The 10-year up 1 3/30, pushing the 10-year yield down to 0.9376%, solidly under that 1% number. We had been up a little over 1.05% earlier. We are now below 1%. Looking at oil, we had some OPEC production cuts, talking about 1.5 million barrels coming out. Not really doing much. WTI off 13 cents, $46.64 per barrel on crude. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. Super luxury standard setter Aman Resorts is spinning off a second lifestyle hotel brand with more affordable rates. Affordable being relative, of course. Even at 30% cheaper, we're still talking about $1,000 a night. Aman's new brand will open in 2022 with 3 locations: Tokyo, Sveti Stefan Montenegro, and Al Ula, Saudi Arabia. Janu's target guest is the occasional very high spender. Think younger, tech-minted nouveau riche, for whom luxury is not about white glove service, but banging nightlife and midday meditation in the same 24-hour cycle, all amid amazing design. In other hotel news, Bernard Arnault is among a pack of potential bidders vying for London's Ritz Hotel. Europe's richest man, chairman of LVMH, is among about 13 interested parties allowed to undertake due diligence for the 5-star hotel. It's being sold by the Barclay brothers. The Ritz could fetch as much as $1 billion. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD HUD.gov/fair housing. That's HUD.gov/fair housing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
If you're going to have NHS dental treatment, don't assume you can claim it for free. Not all benefits entitle you to free treatment. And if you claim when you're not entitled, you could face a penalty charge of £100, plus the cost of your treatment. Thankfully, the NHS Eligibility Checker will help you find out if you can claim for free. Then next time you're at the dentist, you'll know exactly which box to tick. Search Check Before You Tick online today.
This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic. And because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable but not made from recycled plastic. Yet. We're working on it.
The famous five were discussing their next adventure to Oxford. Let's visit Christchurch Tower, said Dick. The Bodleian Library, added Julian. Magdalen Bridge, cried Anne. Dick jumped up. We'd better leave now. Oxford is so far away. Relax, said George. It's faster than you think by train. Anyway, we can't go yet. You're still in your pyjamas. London to Oxford in as little as 44 minutes. So adventures are closer than you think. Great Western Railway. Adventures start here. Fastest train from Paddington to Oxford. Terms and conditions apply.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stocks are tumbling, giving up more than half of yesterday's steep gains as volatility sparked by the spread of the coronavirus woes continue to grip financial markets. Treasuries are rallying along with the yen and gold. We're watching oil as well. It is lower as OPEC ministers took a gamble recommending a large production cut without first overcoming Russian opposition. Jeffrey Curry is head of commodities research at Goldman Sachs.
It's too little, too late. The damage to demand, particularly in China, occurred 3 to 4 weeks ago, and now you have it materializing in the West. The total demand decline is somewhere around 4 to 5 million barrels per day at this point, potentially even larger.
And right now, NYMEX crude oil is down 0.1%, down 6 cents at $46.71 a barrel. The S&P 500 also lower, down 2.5%, down 76 points to 3052. The Dow Jones Industrial Average down 2.7%, or 740 points to 26,348. And the Nasdaq's down 2.2%, or 197 points at 8821. 10-year Treasury up 1 4/32, yield 0.93%. The yield on the 2-year 0.56%. COMEX gold is up 0.9%, or $15.30 at $16.5820 an ounce. The euro 1.1183 against the dollar. The yen 106.85. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Market, 650, call it now, negative 70. We're down 70 points in the Dow. And, a headline. U.S. won't meet coronavirus test rollout goal. That according to senators. I don't know what that senators say.
No, I'm not sure exactly.
We don't know what that is.
We'll have more on that coming up.
I can tell you, we look at the energy of the screen of the 200 data points we have in what we call a launch pad, and you see by the red and the green blinking. And when that headline came out, the pulse of the market picked up. I normally wouldn't do this, but we'll do this, Paul Sweeney, because his Bloomberg, he has 3 logins with 12 screens, and literally they use it as a tanning salon over the equity basis.
That's right.
The energy off of his Bloomberg is so extraordinary that we're always thrilled to have the tanned and not rested Luke Kawa with us this morning. Luke, as a general question, what do you see on your 3 Bloomberg logins this morning?
A lot of fear and the same old pattern, really. You continue to see any rally just being used as kind of an excuse to sell. I think, though, the thing to continue to watch is new lows. That'll be, everyone will be content calling this violent chop that eventually resolves in something higher for as long as there's not new lows. if you get new lows, that goes out the window, and you have to start addressing your downside scenarios, aka how much do earnings fall because of the coronavirus potentially, and how low do multiples get. Some of the extreme scenarios you slap on that suggest a potential 40% decline, which would nobody wants to think about right now.
Tell us about, this isn't Dow theory from the old days of transportation, utilities and that, but what is the theory that's out there right now on bull market, bear market, intermediate, remember how quaint, intermediate bull market,
that's right,
intermediate bear market, where are we in that language right now?
Right now, I've been personally trying to avoid using the phrase bull market in referring to the current conditions, because we're in the we just don't know period. When you do
wait, that's like the Toronto Maple Leafs.
Yeah, there we go.
Needless shot. But so what we kind of have here is a lot of people are saying, the most furious rallies you get, they're during bear markets. All these crazy 3% days we're seeing up, that's actually a characteristic of a bear market.
How do you respond to that?
I went back to Edgar Denny's very classic categorization of bull versus bear markets, and I looked at all the 3% up days. Since 1928, we have 274 3% rallies in the S&P 500. 136 of them during bull markets, 136 during bear, and 2 have happened in the past week, so we don't know yet. So we have perfect symmetry here, and no one knows, which is kind of reinforced by all the numbers.
So he's just a font of statistical wisdom.
Well, he better be for the Bloomberg bill he has. So, Luke, is a bond market telling us that there's more out there? There's more out there than maybe the equity markets are thinking. Look at the 2-year and the 10-year, just really extraordinary levels. Yet you could argue equity's kind of hanging in there. Well, good correction territory maybe.
The one trader I was speaking to, we'll let him remain anonymous for this one. He said the bond market is trading as if the Fed called up Wall Street and said we're going to have another 50 basis point intermeeting cut, because that's kind of what it looks like out there. Well, the interesting thing that you and Tom need to ask your real bond gurus here once we get them around is, in an environment in which euro US dollar can go up 90 basis points in 2 days during risk off, how much sense does it make for foreign unhedged buying of U.S. Treasuries at these levels? That trade's got absolutely smoked. Despite the Treasury rally, you're underwater if you bought unhedged.
This is a really important point, folks, and it's too sophisticated for Thursday morning at this late hour. But Luke, you're dead on, and what it comes down to is it's all about safe haven. And I'm as guilty of this as anyone. On the street, you quote yield until it's about price. And I would suggest, Luke, to your point about Europeans buying U.S., it's all about price now. There's just a massive bid to the bond market. And it's about price. Just price up, forget about where yield is.
Yeah, it definitely seems to be that this is the outlet that you're seeing all the market angst channeled into. Even on good days for the stock market, you see that angst always continuing to channel in the bond market.
So, Luke, what did you make of the Fed's move from a couple of days ago? What was your panic or good first step?
Got to do something, right? Like, they spent a week last week basically saying we're not going to do anything. We don't think this is a big issue. We don't think this is a material change to the outlook. A stock market decline on the scale of what you got last week itself constitutes a material change to the outlook. You have to get in there. You have to do something, even if it's not going to be something that solves the problem itself.
And you're speaking Alan Greenspan 101 and his affection for the stock market being part of the economic mix, and we saw that certainly with the volatility. Can you come back when the VIX goes over 40?
Oh, almost certainly. So in like 5 minutes or so? What are we
5 minutes. Yeah. Luke Kawa, who's such a yeoman's duty for us, seriously, folks, across all of surveillance, each and every day of this new crisis. The VIX was a 38 print moments ago, 37.19, up 5.20 points. I really can't convey enough, just looking at that single measurement of the angst that we're becoming numbed by.
Yeah, we are, Tom. I think it's interesting looking at the S&P were right down at the day's lows here. So again, as Alicia Levine from BNY Mellon said, price discovery. The market's trying to figure out.
I love it. Yeah.
It's a great way to think about it. Price discovery. Where is the bottom of this market? And as Alicia was also mentioning, we've got several weeks to go here before you see the real impacts in the economy. And then we start getting earnings results, and that's where you can have a lot of headline risk here.
And then part of this, folks, is on a technical basis, depending if you're going up or down, you want to see a series of higher highs, and that in no way is what we see in yield this morning. Paul, the yield is right now right at the bottom, 0.5599, and there's no sense of stability there as well. With the Dow negative 800, the VIX 37.40. Stay with
funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced
a change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £21.95 a month. Join the Great British Broadband Switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
Despite never having used them, Alison Peartree was not initially a fan of purple bricks.
Because I heard from my uncle's cousin's neighbour's dog walker they don't have proper estate agents.
But Alison's uncle's cousin's neighbour's dog walker was wrong. Purple Bricks have experienced local agents ready to sell your home.
Turns out Martin from Purple Bricks was very knowledgeable. And he didn't charge commission. I've even recommended him to my sister's boyfriend's auntie's hairdresser, Sharon.
Purple Bricks. Book your free valuation today.
Fixed fee payable on instruction or after 10 months. Viewing service cost extra.
It was a Sunday morning when I jumped on the tube.
And decided to pop down to Greenwich via
a large indoor jungle. And when I got there, I was captivated by a sparkling,
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of Off-Peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters.
£1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
The Mona Lisa is only 30 inches tall. The world's hottest chili? 1 inch. And Napoleon? Taller than a Great Dane, but only by 71 centimetres. Who says small can't make an impact? The Peugeot 108 Allure is now available for just $159 per month, with $159 initial rental. Our small but mighty car that doesn't have to cost you a small fortune. Peugeot Motor Company PLC, a credit broker not a lender, will introduce you to PSA Finance UK Limited. Personal finance lease, 48 months at 159, 18 plus, guarantee may be required. Terms, eligibility and return conditions apply. You will not own the car.
Here you go.
Thanks, Dave.
Dave just made Lucy a cup of tea, which is odd because he's not really a morning person. In fact, he only ever makes tea for Mrs. Stones, his wife, on her birthday. But this morning, Dave got a free vehicle safety check at QuickFit. Tyres, brakes, batteries, the works. Hey, Sandeep. Like the tie. So today, it would seem, Dave is a morning person. Book your free vehicle safety check at quickfit.com or visit your local QuickFit today and drive away happy.
The moment you realise that radiator isn't warming up, it's freezing and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Middle of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from New York City to our worldwide audience. Coming up, we will get the latest on the coronavirus and how it's impacting hedge fund flows in and out of the hedge funds. Plus, also take a look at whether the U.S. is prepared to deal with this response to the coronavirus. We'll get the latest from the healthcare side of things. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
And we're down, Paul. This news is sponsored by New Jersey Institute of Technology, offering an MBA that provides STEM professionals with a technology-focused experience. Learn more at njit.edu/MBA. Stocks are tumbling, giving up more than half of yesterday's steep gains. Volatility is sparking the spread of the coronavirus woes. Continued to grip financial markets. Treasury yields are down to record lows as haven assets remain in demand. Julian Lafargue at Barclays tells Bloomberg he sees the virus sparking another Fed cut.
Not too sure if they're going to use the next meeting. I guess it will really depend on the data we have, not necessarily the macro data in terms of job or things like that, but much more the data in terms of how the virus is spreading around. They may want to wait another month, but clearly the likelihood of the next move being a cut rather than nothing is very high right now.
We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. The S&P 500 is down 2.6%, down 82. The Dow's down 2.8%, down 766, and the Nasdaq's down 2.3%, down 209. The 10-year is up 1. The yield is 0.928%. West Texas Intermediate crude's now down 0.2% at 46.70 a barrel, while COMEX gold's up 1% at 16.5920 an ounce. The dollar yen 106.73, the euro $1.1193, and the British pound $1.2914. Consumer confidence among Americans has slid to a 10-week low as views of the buying climate dimmed amid the virus fears. Bloomberg's Consumer Comfort Index fell to 63 in the week ended March 1st from a 63.5. That's a Bloomberg Business Flash. Bloomberg Markets is on with Lisa and Paul.
Greg Jarrett, thank you so much. Market Jarivers is brought to you by SEI. Since its founding 50 years ago, SEI has provided investment managers and asset owners with robust infrastructure platforms and flexible outsourcing solutions. Go to SEIC.com/IMS. What a day, what a week. We've been having incredible volatility, the most since 2011, with just whipsaw action. Dave Wilson, Bloomberg Stocks editor, joining us here in our Interactive Broker studios. Right now, at the forefront is how well will the United States contain the coronavirus as the New York area identifies 2 more cases. Seattle has some schools closed. Los Angeles in California declares a state of emergency. And now we have this from senators saying that the U.S. will not meet coronavirus test rollouts. What are you looking at to get a sense of whether we're on the up whipsaw or the down whipsaw?
Well, you can start by looking at just how few stocks in the S&P 500 are up at this point. You know, a couple minutes ago, there were only 4. So that'd be the grocery chain Kroger, the gold mining company Newmont, the drug maker Gilead Sciences, and Campbell Soup. In the last
that makes sense. That makes perfect sense.
Yeah, absolutely. Canned soup, you know, at a time when you're stocking up the shelves because you don't know what's going to happen next.
Yep.
Yeah, and of course you're probably buying them at Kroger as well. So, you know, you put that all together, you can sort of understand, you know, that piece of the equation. And then beyond that, I mean, it's just the travel stocks are being thrown out the window at this point. There's no other way to say it. I mean, when you look at Carnival down 9%, you know, Norwegian and Royal Caribbean both down more than 10%, biggest declines in the S&P 500. You see the airlines tumbling, Americans off more than 8%, and then the financial companies. I mean, the biggest ones, you've got J.P. Morgan down 5%, Bank of America, Citigroup, Wells Fargo down close to that, if not that much. And then some of the regional banks and other companies taking even bigger hits. You look at the newly rechristened Truist Financial. This is the old BB&T and SunTrust. It's down at the moment almost 7%, and there are a whole lot more banks that are suffering like that. Charles Schwab's down almost 7%. So, I mean, it's just carnage across the board here.
So, Dave, you've been in the stocks game a long time. What do you make of the volatility we've seen this week? It just seems like 3-4% moves every day.
Yeah, absolutely, Paul. And I just sort of did a thought exercise before I came into the studio. And if you look at the day-to-day moves of the S&P 500, forget direction. We are talking about the most volatile stock market, not since 2011, but since the end of 2008. Yep. In other words, just look at the day-to-day swings in the S&P 500 and add them up. Forget the minus signs for down days. So you're talking about the absolute value. I mean, we've had a swing this week of about 14% in the S&P 500.
Here's the struggle right now is trying to assess the balance of some of the stimulus that we're getting on both fiscal as well as monetary sides, as well as the ongoing spread of the coronavirus, which is a big question mark, right? I mean, it seems like there's a slowdown in the number of new diagnosed cases in China, in South Korea. It seems like the sort of exponential factor is a little bit more limited there. Less clear is what's going on in Europe, and even less clear is the United States, where it's very clearly spreading. So people are trying to pair these ideas, but we are starting to get a lot of stimulus being priced in.
It is the lack of clarity, though. I mean, that's the issue. You can call it uncertainty if you want, but I like lack of clarity as sort of a better way to define what's going on here. You don't know how widespread the virus is going to be in the end, how many people it's going to be infected, and yet you do know that it's having an effect on business as we speak. And not just the travel companies. When you got Microsoft and Facebook telling people in the Seattle area to work from home, for the better part of the rest of this month, and in fact, you got to remember, Microsoft based in the Seattle area, so you're talking about 54,000 employees. That's how many they have there roughly. And it's like, if you don't have to be in the office, stay home. That's the advice. And, so there's real disruption. I mean, beyond what we talk about with the supply chains and certainly with Apple, it seems to be having an effect based on our reporting in terms of being able to give people replacement iPhones. Okay, that's a piece of it. The piece of it is, businesses get shut down, stores or whatever. Now you're seeing corporate campuses affected. And so that becomes a whole nother level of issue for companies going forward as this virus spreads.
Another area of the economy that I just thought was interesting, I saw some news today, ExxonMobil is slowing the pace of drilling in the shale in the Permian Basin, saying, hey, these oil prices, it just doesn't make sense. So you got a big oil giant feeling the effects. It's not just, as you mentioned, some of these consumer-facing names.
Yeah, the shrinking oil giant because of what's happening to the whole industry. I mean, let's face it. You look at the moment, and I'm just going to pull up the numbers on my Bloomberg terminal about the total value of companies in the S&P 500 Energy Index. It's $889 billion as we speak. You got Apple even being down today at $1.3 trillion. You got Microsoft close to that, also being down today. I mean, it just goes to show you how this industry has shrunk, and now you're seeing another example of that with ExxonMobil pulling back in terms of its shale production, and the shares are down 4.8%. And actually, my chart of the day. Yeah, I'll just mention this. It's talking about the number of companies in the S&P 500 that have dividend yields that exceed the yield on the Bloomberg Barclays High Yield Index.
Oh, I cannot wait.
ExxonMobil is in this category.
Yeah, and we saw Chevron say that they were going to maintain their dividend payment even as they come under pressure earlier this week.
Absolutely. ExxonMobil dividend yield now almost 7%.
Wow. Oh, my God. I mean, this is sort of an interesting question. At what point will lower oil prices prompt them to have to cut those dividends? And that's a huge question for people looking at stocks right now for income, given the fact that you're not getting it when it comes to credit and bond markets. I do want to just add this. Right now, Fed funds futures are pricing in almost 4 rate cuts, additional rate cuts by the end of January, leading to a 25 basis point overnight rate. Basically, we're close to zero.
Exactly.
And that's going to be the big question. How quickly does the Fed go to zero? That is what is currently being asked by the market. Dave Wilson, Bloomberg Stocks Editor, thank you so much as always. Right now, let's head down to our 99.1 studios in Washington, D.C. Nathan Hager with world and national headlines. Nathan.
Now we're continuing to follow the headlines crossing the Bloomberg terminal related to the coronavirus. A reporter for the ABC TV affiliate in Nashville, Tennessee, is reporting the first confirmed case of coronavirus in Nashville. The reporter is citing Tennessee Governor Lee in making that confirmation. In all, the global death toll is now up to 3,300 from COVID-19, more than 96,000 infections reported around the world. The World Health Organization puts the global death rate at 3.4%. President Trump called that a false number in an interview on Fox News last night.
We have thousands or hundreds of thousands of people that get better just by sitting around and even going to work. Some of them go to work, but they get better.
This morning, the president tweeted that he never said people who are feeling sick should go to work. He accused Democrats and MSNBC of putting out disinformation. Joe Biden is getting more endorsements after his run of Super Tuesday wins. The Detroit Free Press and Michigan Governor Gretchen Whitmer are backing the former vice president ahead of the Michigan primary, one of 6 states voting this Tuesday. Bernie Sanders is trying to consolidate liberal support, and New York Congresswoman Alexandria Ocasio-Cortez says she's supporting Sanders till the end, but
we have to unite as a party, and the way that we do that is by deciding our nominee at the polls. It's extraordinarily important. Some things are bigger than a primary, and defeating Donald Trump is extraordinarily important.
As a disclaimer, Michael Bloomberg, founder and majority owner of Bloomberg Radio parent Bloomberg LP, has also endorsed Biden for president. Global news on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. Ah, that's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Mother's Day is coming up, so head to your local Asda in London. We've got mini plush bears for just £1. Thoughtful gifts, unforgettable prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Offer ends 22nd of March.
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £21.95 a month. Join the Great British Broadband Switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
Incredible. This piece is my favourite. Stunning. I can't look away. Who's the artist? It's clearly a Costa. Oh, look. There's the artist now. What do you call this masterpiece?
We call it our velvety smooth flat white.
Crafted with the world's best beans and finished with a floret hand-drawn by expert baristas, the flat white at Costa Coffee really is a work of art. Visit the nation's favourite coffee shop and enjoy one today. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details.
This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. we're working on it.
It was a Sunday morning when I jumped on the tube.
And decided to pop down to Greenwich via
a large indoor jungle.
And when I got there, I was captivated by a sparkling
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of Off-Peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters. £1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
From barbers to dog groomers, at Starling Bank, we'll help you keep your business off the ground. With no monthly fees to weigh you down. Your business is ready for takeoff. Starling Bank, helping business fly.
Get to TradePoint for a massive 20% off bathroom furniture, toilets, basins and baths. And if you've loyalty discount, you'll get this on top. So, for big bathroom savings in-store and online, get to TradePoint. Ends 9th of March. Subject to availability, see tradepoint.co.uk.
Switch to Sky Broadband Superfast. It's so reliable, we'll guarantee your speeds or money back. And for a short time only, it's just £25 a month for 18 months with a $19.95 setup fee. So stay connected with super reliable, super fast broadband at a super low price. Switch or recontract today. Search sky.com. Offer ends 12th of March. Prices may change during this period. Includes Sky Pay As You Talk. Sky Fibre areas only. Speeds vary by location. 1 month subscription refund if speeds drop below minimum download speed for 3 consecutive days. Claim twice in minimum term after first 14 days. See sky.com/guarantee.
The Mona Lisa is only 30 inches tall. The world's hottest chili, 1 inch. And Napoleon, taller than a Great Dane, but only by 71 centimetres. Who says small can't make an impact? The Peugeot 108 Allure is now available for just $159 per month, with $159 initial rental. Our small but mighty car that doesn't have to cost you a small fortune. Peugeot Motor Company PLC, a credit broker not a lender, will introduce you to PSA Finance UK Limited. Personal finance lease, 48 months at 159, 18 plus, guarantee may be required. Terms, eligibility and return conditions apply. You will not own the car.
Lines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Sponsored by Witham, a forward-thinking, technology-driven advisory and accounting firm helping clients be in a position of strength in today's modern business landscape. Visit Witham.com to learn more. Stocks are down. In fact, the S&P has dropped more than 2.5% as wild swings pile up. The measure's notched 3-4% moves since its February record and 2 other 3% drops in the most volatile stretch since the week after the S&P Global Ratings cut the U.S. debt rating in 2011. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is now down 2.4%, down 76. The Dow's down 2.6%, down 715. And the Nasdaq's down just over 2%, down 181. The 10-year is up 1. The yield is 0.9408. West Texas Intermediate crude's down 0.5% at 46.56 a barrel. COMEX gold's up 0.9% at 16.58 even per barrel. Per ounce. The dollar yen stands at 108.88. The euro $1.1177, and the British pound $1.2912. That is a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
During the heyday of the hedge fund industry, we forgot that the word was hedged fund right. And that they were supposed to be hedged, not just long the right stocks. The question is, did they act as hedged funds this time around amid all of the volatility that we're seeing? Don Steinbrugge joining us now, managing partner at Agecroft Partners based in Richmond, Virginia, joining us now. He surveils the scene when it comes to hedge funds. What are you seeing? Did they sufficiently hedge?
So let me talk about long-short equity managers in a second, but let me talk about the broad hedge fund industry first. Broad hedge fund industry is a hedge fund structure that consists of a lot of different strategies that allocate to a lot of different parts of the market. Average hedge fund in February was down 2.9%, which is kind of in line with what most hedge fund investors would expect, because you really couldn't hide in February. The market was down 8.2%. Commodity market sold off 5%. Spread fixed income product was down in February. So I think most hedge fund investors are going to be okay with the performance of hedge funds broadly. Relative to long-short equity, average long-short equity manager was down 2.14% in February, which significantly outperformed the S&P 500. They did benefit by the fact that the average net exposure of long-short equity managers is about half the S&P 500, so you'd expect them to only go down about half what the market goes down. But they also add significant value from security selection, which hasn't been something that they have done over the past few years.
So, yeah, that's kind of the issue where I want to go, Don. I mean, you pay the higher fees for the hedge fund, not for, I guess, absolute performance, but for superior hedged performance. Do you get a sense that hedge funds are kind of using this volatility to buy the dips, or do you think they're kind of just staying tight?
Well, first of all, I do think the volatility helps them as far as manage their portfolio, because as they trade, potentially they can get in at lower prices and they can turn the portfolio over quicker as securities, rally during up markets. In a normal market, what long-short equity managers would do when you have a sell-off of 0 to 10% is they would increase their exposure. They're fundamentally driven. If the fundamentals of the underlying stocks haven't changed, they're going to view them as a better value and they're going to want greater exposure to them. If you have a prolonged sell-off, they're going to do the opposite, because one of the things that hedge fund investors do to evaluate a hedge fund is look at what their drawdown is. And if their drawdowns get to be over 10%, hedge funds are going to take money off the table because they don't want people redeeming money and they don't want to be uncompetitive going forward. This is not a normal market. You have a lot of volatility in the market, a lot of information. Is causing the market to go way up and way down. But the big picture is, what is the impact of the coronavirus on the market? And that is something that can't be quantified currently. It is also something that has a huge tail risk to the economy and the capital markets. And until hedge funds can quantify that, I don't think you're going to see them increasing their exposure to the equity markets.
All right. So right now we're seeing pretty whippy action. One day up 2%, 3%, the next day down just as much, if not more. I'm wondering, from your perspective, how hedge funds are playing in this, given the fact that they are paid to actually get engaged when there's blood in the water or potentially something that is disrupting markets. How are they playing in it?
Well, again, hedge funds are made up of a lot of different strategies. So fixed income managers, there's fixed income arbitrage. When you have volatility, you have broadening of the spreads of trading fixed income between the bid and ask spread. They can make a lot of money. They can turn the portfolio over quicker. You have, global macro managers that are shifting the markets that they focus on. You have CTAs that I think have lightened up on equities because a lot of them tend to focus on trends. So there's a lot of trading going around in the marketplace. I just don't think there is a lot of long-short equity managers that are increasing their exposure to equities. I do think they're repositioning their portfolio based on what's happening in the marketplace.
Hey, Don, any sense of fund flows in the hedge fund space here, given this volatility we've seen in the markets?
I think in general, I expect fund flows in the hedge fund industry to potentially improve only because you've seen interest rates decline so much. When interest rates go down, stocks look better than bonds, so money tends to gravitate more to equities and fixed income. The same thing happens with hedge funds. If you're a pension fund and you have 30% of your fund allocated to fixed income and it's only going to yield 0.7%, you're going to look for ways to enhance returns, and I think hedge funds will benefit because of that.
Hey, Don, thanks so much for your thoughts. We always appreciate hearing from you and getting a sense of what's going on in the hedge fund world. Particularly interesting here, given the volatility in the market. Diane Steinberg, Managing Partner, Agecroft Partners, based in Richmond, Virginia, the home of my Richmond Spiders, giving us some perspective there on the markets. Coming off the bottom a little bit here, Lisa, but still decidedly, a very heavy weight to the tape after the move up we had yesterday.
It's interesting that hedge funds aren't getting involved. That Don was talking about how it's too difficult of a market to necessarily be making some sort of long bet to come and catch a falling knife. There is a feeling we have not yet seen the washout here.
Yeah, exactly. We had Alicia Levine from BNY Mellon on, and she was kind of put out the time frame of, the economic impact isn't really going to be really felt in the U.S. for, another several weeks, months.
Let alone even known.
Exactly.
I mean, that's the issue, is that we have no visibility. It could be contained, it could not be. It could shut down metropolitan areas.
Yeah, it was really interesting. She was kind of using the China model and applying that to the U.S., but we'll have to see how it does, in fact, play out here in the U.S. over the coming weeks and months. S&P off 68, 3,062. This is Bloomberg.
This is a Bloomberg Money Minute. Stocks getting hammered this morning after yesterday's surge. Investors sizing up government efforts to contain the coronavirus outbreak. The House passed a $7.8 billion emergency spending bill yesterday. The International Air Transport Association said the coronavirus outbreak will cost the airline industry as much as $113 billion in lost revenue this year. That would represent a 19% drop from 2019 and a financial impact equivalent to what the aviation industry experienced during the global financial crisis. A House committee has blasted Wells Fargo's board and government regulators. A report said neither did enough to prevent consumer abuses. Wells Fargo suffered a number of consumer scandals in recent years, and one involved employees creating fake customer accounts. And Hasbro said the coronavirus outbreak could cause a shortage of the highly anticipated Baby Yoda dolls. According to CNN, quarantines and travel limits in China are keeping workers from assembling them. Courtney Donahoe, Bloomberg Radio.
When you went car shopping, you meant business. You aced vehicle history searches and test drives. You out-salesmaned the salesman. Now you've got your wheels. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll have the info you need to get more for your future. Go to aceyourretirement.org, because when it comes to speeding past financial challenges, you're an ace. Brought to you by AARP and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. The Bloomberg Business of Sports podcast.
How did the Yankees become this mega valuable team?
Where the money is flowing inside sports around the globe.
From the marketing perspective, where are the dollars spent?
From union heads to team owners, Scott Soshnick and Michael Barr speak to the names that power this multi-billion-dollar industry.
Boston Red Sox CEO Sam Kennedy.
National Hockey League Commissioner Gary Bettman.
Bloomberg Business of Sports. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
Ladies and gentlemen, we have arrived in Philadelphia. Local time is 3:05 p.m. and the temperature is 67 degrees. At this time, you are now free to use your cellular devices.
You know that feeling when you get to turn your phone on after the plane lands? You can have that feeling every time you drive. Make sure your cell phone is stowed away whenever you are behind the wheel.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seizechange.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Hi, it's Olivia Munn with my shelter pets, Frankie and Chance. Say hi, guys. When I adopted them, I discovered that they both have incredible personalities. Chance's sole purpose in life is to love and to be loved. Frankie is a little bit of a scoundrel and always entertaining. They're a little bit of a lot of things, but they're all pure love. Adopt pure love at theshelterpetproject.org. Brought to you by the Ad Council, the Humane Society of the United States, and Maddie's Fund.
Interconnect here.
Let's start with the national security implications of this.
Balance of Power with David Weston.
What could the United States do to help?
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up here on Bloomberg Markets, we're going to be speaking with Max Neeson of Bloomberg Opinion, talking about the U.S. response to the coronavirus and what type of containment we can expect to see. Plus, we speak with Barry Ritholtz of Ritholtz Wealth Management to take a look at what we're seeing, the sell-off, and when to buy the dip. Right now, though, let's head over and find out about that dip. Greg Jarrett has that for us.
It's a flash dip, that's for sure. Lisa, stocks are down, not as steeply as they were earlier, but they're down there. The volatility, of course, sparked by coronavirus fears. Treasury yields are down to record lows as haven assets remain in demand. Matt Bailey at Miller Tabak tells Bloomberg he sees a possibility of the continuing downtrend for equities.
Right now, we have no idea when this uncertainty is going to end, and that doesn't mean it's going to be a horrible bear market or anything like a repeat of what we saw 10 years ago, but it does raise the risk that the market could fall further.
It's going down. The S&P is down 2.3%, now down 72. The Dow Jones Industrial Average is down 2.4%, down 661. The NASDAQ is down 1.75%, down 157. The 10-year is up 1. The yield is 0.9408%. West Texas Intermediate crude is now little changed at $46.78 a barrel. COMEX gold is up 0.9% at $16.5770 per ounce. The dollar yen is at 106.88. The euro is $1.1172, and the British pound $1.2910. Rates for 30-year U.S. mortgages have tumbled to the lowest on record as fears of a blow to the economy from the virus sent investors rushing to the safety of treasuries. The average rate now is 3.29%. That's down from 3.45% last week and the lowest in 49 years of data keeping. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It's 10:33 on Wall Street. Time to check in with Bloomberg Opinion. We're joined by opinion columnist Max Neeson. He covers biotech, pharma, and healthcare for us. He joins us here in our Bloomberg 1130 studio. So, Max, a really interesting column you've got out here saying that the U.S. is uniquely hamstrung on virus response. What makes us so unique?
So the most important thing in the response to the virus is that when people feel sick, they stay home, and if they're really sick, they go get treatment. And we have put in barriers in place that make it difficult to do all of those things. For example, we don't have as much paid sick leave as other developed countries, and especially for people without a financial cushion, it's difficult for them to stay home. That's how you get people that go back into the workforce even when they're sick, greater spread the virus. Also, it's the beginning of the year. People haven't met their deductibles yet, and these are the people that are lucky that have health coverage, and they are potentially exposed to the cost of testing and even greater cost of God forbid, needing to stay in the hospital for treatment, which can escalate really rapidly. So people are conditioned to go into work when they're sick. They're conditioned to avoid care unless it's a really dire need, all things that will make responding to the virus harder.
And meanwhile, a headline this morning, the Trump administration won't be able to meet its promised timeline of having 1 million coronavirus tests available by the end of the week. This according to senators speaking after a briefing today from health officials. Do we have a sense of where we are in terms of the spread of the virus in the United States?
Not an accurate one as of yet, because the escalation of testing capacity and even testing guidelines actually making so that doctors who have a suspicion of a case, someone symptomatic, can actually get a test instead of having to fight their way through a bureaucracy that previously only narrowed testing to just people with a direct travel history or link to China. So it's still very much catch-up mode in terms of testing capacity and actual tests run. So we're likely to still see the number of cases escalate in the days to come.
Is there a sense, Max, as you talk to the folks in the healthcare beat that you cover so well, as to will this potentially follow the same timeline as China in terms of the peak and the valley? It looks like China has peaked here in a number of new cases and things like that. So is there an expectation that we'll see a similar time frame here?
The thing that makes it hard to tell is that the response has been so different.
Yeah.
We know that it's here. We know that it's spread probably much more widely than the current, official number would indicate based on that testing lag. But what we haven't done is taken much in the way of mitigation or containment measures. Even in Seattle, where there's evidence that it may have been spreading for as long as 6 weeks based on a genetic test of some of the samples, they're still not canceling events. It's still just basically guidance to individuals and businesses. So unless we start to do that, there's a chance that we may be kind of responding after the fact and may have a harder time containing the virus.
Is there any sense of whether warmer weather will stall the spread of this virus? Because that seems to be the pattern when it comes to influenza.
That's the hope, but since this is a novel coronavirus, it's something that we have no experience with, people have no immunity to, we just don't know for sure. So we'll begin to get a sense of that in the months to come as it gets warmer and whether cases start to drop off or not, but too early to tell, unfortunately.
So just switching gears a little bit, healthcare stocks had a good day yesterday with the Biden primary. Is there expectation, any follow through on that, or was that just a one-day bump?
The contrast with Sanders, a week ago he was the presumed nominee. That's a big deal, particularly for insurers. The difference between elimination under Medicare for All and a new competitor of modest size in the public option, that justifies a decent stock bump. The Biden plan, however, isn't benign. It's still, introducing a new government kind of intrusion into the business that will be, grow over time if it's appealing and affordable. And on the drug pricing side, he's not quite as far from Sanders as people might think. So, there's a justification for some bump, but I wouldn't get too exuberant.
Before we let you go, I just want to get a sense of remedies, what the medical forefront is when it comes to either vaccines or potentially medications that can treat the coronavirus. How far are we?
Vaccines, more than a year on an optimistic timeline. Therapeutics, the earliest we'll get a sense of whether we might have something is in April, when we get the data from an existing Gilead drug that they're running a series of trials on. A new therapeutic, even, well beyond that. So still, it's going to be a little bit before we have available treatments and vaccines.
Max Neeson, thank you so much, as always, for being our resident healthcare expert. And I will ask you all sorts of personal health questions in the break. Max Neeson, Bloomberg Opinion healthcare columnist, joining us here in our interactive broker studios. We are seeing the indexes take a dip lower near their session lows. The Nasdaq down near 2%, S&P 2.5%, Dow down 2.6%. And really, to me, the story really is in the rates market. We're seeing just an incredible pull forward of the expectations of 0% overnight benchmark rates. The idea that the Fed is going to cut rates and cut aggressively for the remainder of the year, to me, really catching my attention.
Yeah, absolutely. The 2-year, at least at 0.5%. 5658. I'll go out 4 decimal points for Tom Keene.
Yeah, I mean, this is really the story of the moment. Right now, let's head down to our 99.1 studios in Washington, D.C. Nathan Hager with World and National Headlines. Nathan.
The story in Washington and around the world continues to be the coronavirus, Lisa. Cases continue to rise in the U.S. New York City Mayor Bill de Blasio reported 2 more this morning on MSNBC, making New York State's count 13. New Jersey has confirmed its first patient as well. Republican Congressman Greg Walden made this promise on CNN this morning.
We think by the end of the week, there'll be like 1.5 million tests available out there.
After meeting with health officials today, though, senators say the Trump administration is likely not to hit that mark. Health officials have been urging Americans not to buy masks. Bloomberg's Amy Morris reports the Department of Veterans Affairs may be facing a shortage.
Some emergency stockpiles of respirator masks at the Department of Veterans Affairs in one region of the southeastern U.S. have deteriorated in storage. They can't be used. An internal email viewed by Bloomberg warns the agency may have overestimated its supply of the masks, which are different than the standard surgical masks. A VA spokeswoman says the VA regularly inventories their supplies, and she says they're not experiencing any shortages of respirator masks, gloves, or gowns. In Washington, I'm Amy Morris, Bloomberg Radio.
Just in, Massachusetts Senator Elizabeth Warren plans to drop out of the Democratic presidential race today and will inform her staff of her plans later this morning. That is what a source is telling the New York Times. This ends a run defined by an avalanche of policy plans that aim to pull the party to the left and appeal to enough voters to make her briefly a frontrunner last fall, but proved unable to translate that excitement into backing from more working class and diverse members of the Democratic Party. Global news on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
You could find a $5, a $10, a $20, or even a crisp $50 inside the Sun on Sunday. That's right, cash! Yes, real banknotes inside the paper. We're giving away a wallet-busting amount of cash this weekend only in the Sun on Sunday. It pays to read The Sun. T's and C's apply.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres. Ends 18th of March.
Full English is all round today, please, Kat. I'll get this, lads.
Seems the gaffer's unusually generous today. Not because the Reds won last night, but probably as he managed to get 10% off a set of Michelin cross-climate tyres, plus a free safety kit at QuickFit.
Can I get some extra bacon, boss?
Steady on, Danny boy. You'll be making all the teas today. Get 10% off 2 or more Michelin cross-climate tyres. Book at quickfit.com or visit your local QuickFit and drive away happy. Terms and conditions apply. See website for details.
Sofas. At DFS, they go through tough quality tests to make sure they're ready for whatever home life throws at them. Like this big sit test, the equivalent of sitting down on a sofa over 96,000 times. And with up to half-price savings on our spring collection and extra early bird savings on selected sofas, you know they will pass the value for money test too. Can I stop yet? DFS, making every day more comfortable.
The moment you realise that radiator isn't warming up, it's freezing and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Tooting's your destination for college basketball, and it's free.
Down the right side of the lane, jumper up and good.
This week, we have a must-hear game. North Carolina at Duke.
2 for the win! No, tapped up by more! And it is the Blazers! More bakes it in!
This Saturday, tip-off is at 6 p.m. Eastern.
Kimball right of the lane against the SU zone to Warren.
With college basketball and TuneIn, you can hear every call from games around the country live. Search college sports to listen free today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
New York Times and CNN are now reporting that Elizabeth Warren, once a frontrunner, will drop out of the presidential race. More of that coming up in the news. Stocks are sinking after California declared a state of emergency following the first death from the coronavirus in the state the day before, and as the number of confirmed cases in the U.S. continues to rise. We look at the numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is now down 2.4%, down 75. Dow's down 2.6%, down 697. And the Nasdaq's down 1.8%, down 165. The 10-year is up 1. The yield is 0.9264%. West Texas Intermediate crude is now down 0.3% at 46.64 a barrel. COMEX gold's up 1% at 16.5930 an ounce. The dollar yen 106.78. The euro's $1.1179, and the British pound $1.2928. Southwest Airlines is warning a drop in bookings will dent first quarter revenue, compounding evidence the coronavirus impact is spreading across air travel. Right now, Southwest Love is down 3.75%. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Right now, we are looking at markets pulling back a little bit from their earlier losses, still solidly in the red. And the question for a lot of people is not just when do I buy the dip, but when do I even get involved? How do I even understand when to make allocation shifts in response to this news? Barry Ritholtz joins us now. Barry Ritholtz, founder of Ritholtz Wealth Management and a Bloomberg opinion columnist. Barry, I know what your advice is. 60-40. keep it in, long term, boom. But I have a question for you based on what is going on currently, right? And that is, how much do we have to bring down our earnings and our dividend expectations for the S&P 500 at this point, given what we're seeing with respect to some of the guidance that we're getting out of airlines, out of entertainment companies, out of gaming companies?
Sure, anything involving travel, tourism, go down the list. The more challenging aspect, that's easy. Airlines, cut them to zero. They're going to have, their profits are going to be, for the quarter, are going to really be pressured. The bigger question that I think we have a hard time answering is, what about the global supply chain? Already, there have been rumors of an inability to replace iPhones from Verizon and AT&T because the shipments are down. So the bad news is we don't know how severe this is going to be, and we don't know how long it's going to last. The good news is every time we've seen one of these over the past century, it has its impact. It lasts a couple of quarters, and then on the other side, things go back to normal. Today, we have a double-edged sword. On the one hand, we can develop tests to see if you're positive or negative much quicker than we were able to do before, and theoretically, we'll come up with a vaccine for those of us who actually believe in things like science and vaccines much more quickly than we used to. The flip side of that is technology spreads information and misinformation about this, which leads to panic and fear. I don't think you would have seen a week like last week half a century ago, because the relentless drumbeat of panic and fear and info and misinfo just didn't exist in that same way, and so we would not have had that immediate emotional response. You still may have ended up down 12%, but it would have been over a couple of quarters as we actually saw it work its way into earnings instead of work its way into the fear of earnings.
Barry, what did you make of the Fed's action earlier this week, the 50 basis point cut? Was that panic to you? Was that them looking too much at the markets, or do you think the underlying data supported it?
The data suggests that we're going to have a demand side slowdown. That's all the different sectors Lisa was talking about. That's there. Nothing at all is suggesting if only rates were lower, I would go to Disneyland. If only rates were lower, I could go to the Facebook Developers Conference or the New York Auto Show or anywhere else, any of these other big events that are being canceled. So it seems that we have developed this unfortunate habit of responding to situations with a monetary solution when it really calls for a fiscal solution. And the old joke is, to the man whose only tool is a hammer, everything looks like a nail. We seem to have abandoned the traditional Keynesian response to diminished demand for goods and services. Hey, when the private sector slows down, the government should step in with either tax cuts or spending or both to temporarily replace that demand, assuming you want to cushion the blow of the slowing economy caused by this.
Sure, and we can talk about what they should do. What they are doing and what they're expected to do is another story, and currently looking at Fed funds futures just more aggressively pricing in lower rates sooner. 2 full rate cuts currently being priced into Fed fund futures for the meeting on March 18th in less than 3 weeks, coming up after their 50 basis point emergency rate cut, the first that they've done intermeeting since 2008 and since the crisis then. It raises a question. What does it do? Does it support equity valuations anymore, especially if the response is to something that we cannot evaluate right now on its face? We don't know how much it's going to bring down earnings. We don't know the relative valuation case at this point. Is this the time when we see that relationship, lower rates pushing up this sort of risk to, this search for yields, this flight to risk? Is that connection broken?
I'm not sure if it's broken. What seems to be going on, and this is, I have access to the same information that you do. I'm not speaking to Fed insiders. I don't know what they're talking about. I do recall them saying a long time ago, I think it was January, that they're concerned about negative interest rates. We heard that throughout 2019. Well, if you want negative interest rates in the United States, hey, keep cutting federal funds rates. If you drive that low enough, eventually your worst nightmare will be here, which is negative interest rates. So I don't understand, are they responding to presidential pressure? Does the Fed have the same sort of unhealthy obsession with how high the stock market is that the president does? It's hard to judge from the outside. It looked like panic to me, and it also looked like the wrong prescription. You know, an aspirin isn't going to cure a common cold, and this sort of viral infection is going to have an ongoing impact on demand that we have no idea how big it's going to be. Cutting rates, talk about pushing on a string. How are cutting rates going to have a positive impact on this? It's really surprising.
I was speaking with Jim Bianco earlier this morning.
Love his work.
Oh boy.
And one thing he said is that there is actually a fundamental plumbing issue that as people
on the repo side, or
on the repo side.
Yeah. And that's well known for how long? Over a year now.
But that basically that people have been pulling their cash out of markets. That basically cutting rates will help ameliorate some of the plumbing issues.
If you have a problem with the repo market because of a lack of liquidity, as we learned in the aftermath of 08-09, the solution is to flood that market with additional liquidity. I don't think rates make all that much of a difference. I think they have an ability, the Fed has an ability to take a market that is, I don't want to say frozen, but creaky. Remember, the 87 crash was caused by plumbing issues within the market structure. I don't mean literally. This is really a much more narrow little niche, hopefully less systemic than what we saw in 87. But the Fed is aware of it. We know how to fix it. We just did this a decade ago. None of it has to do with rates that by any historical measure are incredibly low and very accommodative. So I don't understand the Fed and their hammer. Everything apparently is a now.
Barry Ritholtz, thanks so much for joining us. As always, Barry's a Bloomberg opinion columnist. He's also host of Masters in Business on Bloomberg Radio. Yeah. Lots of stuff, but founder, chairman, chief executive officer of that Ritholtz Wealth Management. He's got plenty going on. This is Bloomberg.
Business is like a puzzle.
Can you make a call given this swirl of data?
Get all the pieces.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
You could find a fiver, a tenner, a 20, or even a crisp 50 inside the Sun on Sunday. That's right, cash! Yes, real banknotes inside the paper. We're giving away a wallet-busting amount of cash this weekend only in the Sun on Sunday. It pays to read The Sun. T's and C's apply.
Take the next left, take a right, and you've arrived at your Vauxhall retailer, where you'll find the all-new Vauxhall Corsa. Test drive now and you can take advantage of a £500 deposit contribution with 4.9% APR representative. Book your test drive of the all-new Corsa now. Vauxhall. New rules Britannia. £500 allowance provided as deposit contribution on qualifying new Vauxhalls. Conditional sale and personal contract purchase only. Subject to status, T's and C's, 18 plus Vauxhall Finance. Registered by 2nd of April 2020. Search Vauxhall Test Drive.
The moment you realise that radiator isn't warming up, it's freezing and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Where's your views on the municipal bond landscape?
The market does not like uncertainty, does not react well to uncertainty.
There's a whole lot of optimism around the valuation of Uber.
What is Ford saying about the self-driving car?
Breaking market news and insight from Bloomberg experts.
Maybe we're getting hooked on debt and low interest rates.
The black hole called power could be a bigger black hole.
Only buy IPO stock that you can't get. If you can get it, it's probably a dog you don't want it.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning. Coming up on the show, we're going to be talking about healthcare stocks, the big pop following Biden's win in South Carolina and just beyond on Super Tuesday. Plus, a look at oil. Oil prices falling, even though OPEC has agreed to further production cuts. We'll dig in. Right now, let's get a check of what's going on in the markets. Greg Jarrett has that for us. Greg.
Still well down, Lisa, though we are just a bit off earlier lows. It's all about fear of coronavirus. Tim Ryan, PwC U.S. Chairman and Senior Partner, tells Bloomberg there really is no way to tell how this coronavirus effect is eventually going to play out in the markets.
I mean, we're dealing with something that we haven't seen before. We've always said in the past, CEOs like certainty. What we're seeing is society like certainty, and it's uncertain right now. So it's just frankly too early to tell. I will say this. For the last several years, businesses have been investing in technology. They've been managing their cost structure. So in many ways, they've been getting ready for something like this. There is some level of preparedness. But when you look at demand, you look at consumer behavior, it's just too early to tell.
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500's down over 2%, down 64. The Dow's down 2.25%, down 611. The Nasdaq's down 1.7%, down 151. The 10-year's up 1. The yield is 0.9328%. West Texas Intermediate crude is little change now, up 0.1% at 46.82 a barrel. COMEX gold is up over 1% at 16.6040 an ounce. The dollar yen 106.68. The euro is $1.1188, and the British pound $1.2921. OPEC ministers took a gamble, recommending a large production cut without overcoming Russian opposition first. The cartel is seeking to offset the demand hit from the coronavirus epidemic. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Paul and Lisa.
Greg Jarrett, thank you so much. We appreciate that. Bloomberg Markets is brought to you by Commonwealth Financial Network. For the 6th straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit Commonwealth.com to learn more. A risk-off day today, certainly after the historic rise we had yesterday. Let's see where the action is in the world of small and mid-cap stocks. To do that, we turn to our good friend, Dave Wilson, Bloomberg Stock Editor. Dave, what are you looking at?
Russell 2000's down more than the S&P 500. We'll start there. The Russell lower by 2.5%.
He looks at me.
And the S&P 500 lower by 2.1%. Steepest drop in the Russell belongs to Amplify Energy, whose ticker is AMPY. The oil and gas producer has lost about 29.5% after posting an unexpected fourth quarter loss and cutting its dividend by 50%. Wide Open West, ticker WOW, has fallen almost 19%. Fourth quarter results showed the cable company's earnings trailed the average analyst estimate in the Bloomberg survey for the first time since it went public in 2017. And CalAmp, ticker CAMP, well, that stock's down almost 19% as well. The communications equipment maker gave a fiscal fourth quarter revenue estimate that missed its forecast. Now, the Russell's biggest advance belongs to Genmark Diagnostics, ticker GNMK. Company's developed a coronavirus test kit, and the shares are up 26%. Genmark's awaiting U.S. approval for that kit. And MYR Group, ticker MYRG, has gained about 17%. The power grid builder posted fourth quarter earnings and revenue that surpassed projections.
Dave Wilson, Bloomberg Stocks editor, thank you. And I want to give you a shout out. You put out some really remarkable charts this week and every week for your chart of the day. I highly recommend it. Follow him on Twitter at @TheOneDave. Get his email. It is really important to watch. Also,
absolutely. And let me give you that email address.
Yeah, go ahead, please.
dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Highly endorse it. Right now, I want to also endorse what we are looking at in healthcare stocks, not necessarily endorse it, that's probably the wrong phrasing, but to take a look at it. And luckily, we have Bailey Lipschultz to do it with us, Bloomberg Health Equities reporter. Bailey, we've seen a huge surge in valuations, and people have attributed this to Joe Biden's win in Super Tuesday's contested contests. I'm wondering, how significant is it? How much staying power? What are we seeing?
A lot of unknowns, Lisa, but obviously we saw this earlier in the week when we saw Pete Buttigieg and Amy Klobuchar both drop out, go ahead and back former Vice President Joe Biden as well as Michael Bloomberg. So there was a lot of excitement going into how this could kind of swing and how this could change the Democratic Party, the Democratic primaries, and do away with the dreaded Medicare for All that Senator Bernie Sanders has been pushing. So with that big win in South Carolina on Saturday, followed by the news Monday and a very strong showing on Super Tuesday, investors really are putting chips back on the table that the Medicare for All and kind of this concerns that private insurance will go away. But as we've seen so much with this volatility within this coverage, within looking at the Democratic primaries, we're still in the early innings. This is still probably the third, fourth inning as opposed to game over Biden versus Trump, as some people have kind of seen with when we saw the anthems, the centenes, the Humanas up 15% yesterday.
So, Bailey, give us a sense. Was it sector specific, or was it kind of across the board? Or, I know the insurers were under a lot of pressure, for Medicare for All and so on and so forth. Give us some color there.
Well, it was broadly a very strong day yesterday for healthcare stocks. Obviously, markets performing pretty rocky today, but there was a big relief rally, mainly driven by the managed care names. They have the most to lose with the push for Medicare for All, but also a lot of push from candidate Bernie Sanders for things like drug pricing, plans that he's laid out, plans that Elizabeth Warren and him have seen eye to eye on that really could put some of these profits and some of these gains across the sector. So putting pressure on things like pharmaceutical companies, biotechs, as well as managed care, which we saw rallying relief on the news yesterday.
I feel like there's a dual sort of boost here for healthcare stocks. On one hand, we have the election and the possibility that perhaps the Democratic candidate will not be as populist or come up with some sort of Medicare for All type of plan. And then you have the coronavirus and the potential for remedies there and bets on biotech. What are you seeing on that front?
Coronavirus is a tricky one. We've seen huge companies like Gilead see unreal surges off of the potential for their drug antibody. We've seen companies like Moderna parading around their vaccine candidate. So it's more stock specific, I would say. But granted, a lot of companies are, whether they're touting potential drugs or vaccines for it, or companies like Genmark that are kind of promoting tests.
Or the $7.8 billion package that Congress passed yesterday to help ameliorate some of the pressures both in the medical system and beyond when it comes to treating the coronavirus. Is that factoring in at all, or is that just too early to say and hard to know where it's going to go?
That's something that from my contacts and conversations with investors doesn't hurt, but whether that actually plays into kind of the longer term fundamentals for these companies, it remains to be unseen because there is so much unknown. We are certainly in the early innings with the virus domestically here in the U.S.
Hey, there's a news story out, Bailey, just how some senators are saying that the 1 million coronavirus tests are not going to be available by year end, which is what the administration was suggesting. A big deal, as expected. What do you think?
I don't know if anyone on Wall Street is truly shocked by that. But at the same time, it's really been shown from conversations with analysts, with specialist investors, is that the U.S. has not been prepared for this. The lack of spread, whether you want to slice it between a lack of testing or there actually being less cases, it's very much a concern over what this could mean. But I will say that from my conversations on that news, as you mentioned, not being able to meet that goal was kind of broadcast from these companies, given how quickly the tide has turned over the last month and a half.
Bailey, thanks so much for joining us. I really appreciate it. Bailey Lipschultz, equities reporter for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. Give us some perspective perspective on the rally that we saw yesterday and some of the healthcare names giving a little bit of it back today. But I think the expectation, that Medicare for All might be a little bit lower odds. And I should also note that Michael Bloomberg is the founder and majority owner of Bloomberg LP, also sought the Democratic presidential nomination. He endorsed Joe Biden on March 4th. So, I mean, I think, it's interesting to see how the healthcare industry is going to play out here. Looking at the markets, coming off the bottom a little bit here, Lisa. The S&P off 58, the Dow off 553, still solidly in the red, but a little bit off the bottom. NASDAQ off 136. But let's pull in that 2-year yield, Lisa, still extraordinary. 0.5815 on your 2-year. Right now, let's head down to our 99.1 studios in Washington, D.C. for world and national headlines. We go to Nathan Hager. Nathan, what do you have?
Well, Paul, Massachusetts Senator Elizabeth Warren is ending her 2020 Democratic presidential run today. That is what two people close to the campaign are telling Bloomberg News. Bloomberg's Kevin Cirilli reports the next question is, whom will Warren endorse?
Will it be Biden, and will that further illustrate that Biden is unifying all different factions of the Democratic Party, or will she choose someone who she, quite frankly, is more ideologically akin to in Senator Sanders? It would also, if she were to go the Sanders route, inject